the S&P pulling back. Is it a garden variety pullback? I mean, it doesn't look all that alarming just yet. It's still above that rising 50 period moving average. It's coming into prior resistance from about a month ago. So I'm not going to sit here and say that I am flashing the crisis flag here. This seems to me like a well-deserved pullback. I wish it wouldn't have all happened in one day. But if this bull market is going to continue, I have to believe that the S&P 500 is probably going to dig in somewhere around this area. So perhaps the worst is over. We shall see. Here's the Qs, kind of the same story. Qs kissed their highs, by the way, and then immediately rejected, or almost immediately rejected. But again, not a level of concern yet. Of course, this bears monitoring. And of course, I don't think we'll get any resolution to the downside or out to new all-time highs until we get the election out of the way on Tuesday and coming into Wednesday. But something worth monitoring. But for now, you want to see the Qs and the SPY dig in right around here, and that would be totally, totally normal. All right, so let's talk about some let's call it some bad news, right? We had three positions that have exited this week, all for losses. None of them bad losses, thankfully. But we had to rip the Band-Aid off. And, this speaks to what I've been talking about for the last week or so about how I am of the mind that I really want to be adding some diversification to my portfolio. I came into this, came into this month certainly heavily long because it was a bull market. But in the last week or so, I've been adding positions that will either, have the risk of, the risk is to the downside in those names. Stocks that have been weak. I've been getting short those stocks. I've also been getting into some plays that may have a reversal in fortune coming out of the election for a number of reasons. It might be because maybe the election results don't pan out the way the experts think. That could cause a reversal in fortune in some of these names. It could be because a bit of a sell the news event, right? There's a lot of stocks that seem to be pricing in a Trump victory. Well, if Trump doesn't win, maybe, sorry, there's a lot of stocks that are pricing in a Trump victory. And maybe if Trump wins, maybe we get a sell the news type event, right? So there's risks out there, and I want to be adding more positions that, give me a little bit of exposure in both directions. I'm not leaning hard in it. I don't want to lean hard in any one way because I don't know. This is a big binary event where anything can happen. And so we have to be positioned accordingly. I have positions that I think can continue to outperform on the upside. I've also been adding positions that I think could outperform on the downside if things head that way. So anyway, let's talk about the three positions we've exited. And these three positions are, case in point in why I want to add some diversification in my portfolio, because if the bull market ends, it could end in, or not end, but if we have a meaningful pullback back in the markets, I mean, that could be a painful experience for me if I don't add short exposure. So here, these three stocks are examples. Case in point, ExxonMobil in no particular order. We got out of this one yesterday. We were in a protected risk reversal. What that means is I sold a put spread with defined risk and used those proceeds to buy a call spread with defined upside. When we put the trade on day one, we put it on for a 50-cent net credit. And how about that, ladies and gentlemen? I couldn't have done this if I tried. I marked the top, at least for now. The top right here, that was the day we got in, I believe. I believe that was the day. It might have been, maybe we got in a day before, but whatever. Either way, bad timing. The position has more or less just gone straight down on us since we got in. I had to close the position, so I had to buy back the put spread, and then I sold the call spread. All in, cost me $2.61 debit to get out of that trade. Let me zoom in here a little for you. It cost me $2.61 to get out. I collected 50 cents on the way in, so net, my loss on the trade is $2.11. Not terrible. Not terrible, especially when you consider we got in here when the stock was at 125 and we got out when the stock was below 118. So not a terrible loss, but either way, we're out of ExxonMobil. All right, let's go to the next one. Again, no particular order here. Home Depot exited this trade this morning. We were long a February 420, 450 bull call spread. We paid 11.75 for it. back here on October 14th. Much like ExxonMobil, we more or less bought the top there, and stock has done nothing but go down since. Our stop level was 395. We kissed it and flirted with it on the 29th on Monday, but we didn't close below 395. So it earned another day. Here is the next day, the 30th. Yesterday, we closed below the level and we remained below there this morning. So I exited the position. I bought it for 11.75. I got out for 6.95. Again, not a terrible loss. I say this every time with these defined risk trades, but when I put a defined risk trade on, I size the position fully prepared for that position to be a zero if I'm wrong. I don't expect it to be a zero, and it doesn't happen very often, but I have to size my position knowing that that is a risk. Okay. And I size it in a way that if I do lose 100% of my premium, the total impact of my portfolio is no more than 1 or 2%, usually closer to 1%. Sometimes I'll stretch it to 2, depending on the situation, if I'm feeling a little bit more bullish on the idea. But had this stock or had this spread been exited for a zero, the larger impact of my portfolio would have been about a 1.5% loss. No big deal. But the fact that I got out at 675 means the loss in the grand scheme of things, not a whole big deal. And that's a pretty common theme among all of my trades, or at least most of my trades. Finally, PayPal also exited this one this morning. Similar story to ExxonMobil, or to Home Depot, excuse me, on the 29th. It was way below our stop, and it battled back all day, closed above our stop loss level. So it lived to fight another day. But then yesterday, gap down again, couldn't get back above it. So we closed it this morning. I paid $1.85 for this call spread. This was an April 100, 115 call spread. Got out this morning for $1.25. Again, not that bad of a loss. We will take it. All right, now let's update some stops on some existing positions. We have three stops or three positions that we're updating. First up is Microsoft, and boy, it's coming right to our level. We moved our stop up. I believe it was at 400 coming into today. I moved it up to 408, which is right below this support level from earlier this month. Right now, it's digging in there. We'll see. As long as we close above 408, if we closed where we are right now, Microsoft would live to fight another day. I'm betting the Microsoft's going to dig in here and hold, but it might not. But either way, our new stop now in Microsoft is 408, and we might get out tomorrow. We'll see. Next up, NSP Insperity Inc. This is one of my diversification plays. This is a bearish play, just to hedge my portfolio a little bit. And so far, it's working. We're long the January 75 puts. We paid $2 for them. We got in, I believe we got in right here on the 18th. It's been a wild ride, certainly, but it's a wild ride in the direction that we want it to be. And, maybe that's not so much of a surprise, right? Bear markets and bearish moves are always, or at least not always, but most of the time are more volatile than bullish moves. Bullish moves tend to happen a little bit more smoother. Bearish moves tend to be a little bit more herky-jerky. A lot of, buying the dip people, a lot of bounce players, and we certainly saw that a few days ago. We had a big rally on the 29th, but we're coming back down towards the lows. I like our hedge here. It's working pretty good for us, but I'm lowering my stop because this is a bearish trade. Where I'm lowering my stop now to 90. I don't want to see NSP get back above 90. Any close above that level would get me out of these January 75 puts. And finally, ARK. We are raising our stop up to 45. I believe our stop was at 44 beforehand. Raising up to 45, just a small little raise. But, since we got in, the stock did print a new high a few days ago. You can see right here. So I'm raising my stop to below the lowest level of this little sloppy, choppy zone. Which also corresponds with being below the 250 period moving averages, which no surprise, ARK seems to be digging in right around at that level. But I'll give it more room, down to 45. That's my line. All right, and we're in a call diagonal spread. It's like a calendar spread, but it's diagonal because the strikes aren't the same. We're short the March. We're short the November 53 calls, and we're long the March 55 calls. I'm hoping that the November 53 calls expire worthless, which right now it's looking like good odds at this point. But I don't want it to trip my stop I'd like to continue holding those March 55 calls into March if I can. And if those November 53 calls expire worthless, then that means I would have gotten these November 55 calls at a discount, which is what I wanted. I paid $1.25 to get in, and that's the most I could lose, by the way. But for now, raising the stop up to 45 in the ARK Innovation ETF. All right, that's it for the stops, guys. Last up, we'll quickly review some of the newer trades we've got into since we last spoke. As always, guys, all the trade details, the entire trade plan for these trades, the setup, why we like the setup, the option strategy we're using, where we're managing risk, where we may or may not be taking profits. All of those details are laid out in the blog post. You can find them at allstarcharts.com. I also put a link in the YouTube channel there in the chat room. If you're not involved with All Star Options, get involved. Join us. We have a great online chat community. We're sharing ideas all day long. People ask me questions and people ask each other questions, and it's a great community. We support each other. If you're not involved, please do get involved and you'll get all these detailed trade plans. But for now, I'll just highlight that Hershey is a stock that we got short, one of those portfolio diversification plays. Got short here on the 28th. So far, so good. Next up is Mara. Man, got into this one yesterday, 2 days ago. And man, I'll tell you, this Mara, I knew it going in. I said it going. I even wrote about it in the blog post. I am so snake bitten with Mara and all the Bitcoin miners. There have been so many setups over the past 2 years where I felt like this is the time it's going to go. And sure enough, it was not. And I knew that going in with Mara, and I said, you know what? I gotta keep stepping up to the plate. I gotta keep taking swings because one of these times it's going to work and it's going to be a beauty. Well, as you can see, we're in a long position, a little bit more of a complicated trade. Again, the details are on the blog post, but we're already right back below our stop loss level. If we close below 17 today, I'm going to be getting out of this trade tomorrow already, which is just the way it is. All right, next up, Sunrun, ticker RUN. This is, again, one of those change in narrative plays, right? This stock in this sector, the solar sector, has been getting beaten up. If we zoom out a little bit, been getting beaten up. I mean, for the most part, we're going sideways for the entire year. But now, as we're leading into the election, it is believed to be that solar industry would not fare well under a Trump presidency. So this is a bit of a Trump winning play. But if we get a sell the news event upon his election, or if we get an unexpected result and Harris wins, there's a good chance that Sunrun and other solar stocks like it could see a big rebound. And that's the bet we're making. It's a defined risk play. All right, defined risk. We know the most we can lose. Our stop is at 13 here. We'll see what happens. Again, this is one of those portfolio diversification plays. All right, everybody. I hope you found some of this instructive. Here's a slide for those of you who like this. These are the updated stops that we already talked about, the 3 stocks we updated. So take a screenshot if you need to, pause the video if you need to. And lastly, as always, if you have any questions at all, shoot me an email, info@allstarcharts.com. That'll get routed to me. I'll see your question. I'll answer it as best I can. You see the link here. If you're not involved in All Star Options, you can get involved with this link. It's also, again, in the YouTube chat. So click it there. And finally, if you like the charts that I share, my friends at TrendSpider.com have hooked us up with a discount. If you want to get involved, you could use promo code Sean50 to get 50% off subscriptions to TrendSpider.com. I use it. I love it. I think you will too. All right, everybody. That is all I got. Have a great rest of your week. Enjoy Halloween tonight. Have fun responsibly or irresponsibly if you need to. Either way, have fun. We'll be back next week. Until then, I'll see you.